and practice set.
Welcome, everyone. Just give us a few minutes. We're waiting for some additional participants to join, and we'll just get started at a few minutes after. Thanks. Give it one more minute, and then we will get started. All right, we're still waiting for a few more people to trickle in, but we'll get started with today's session. So good afternoon, everyone. My name is Nate. I'm with Oro. Welcome and thanks so much for joining for today's first time home buying session. Quick note, as usual, we will be recording today's session and it will be made available for future viewing. So please keep an eye out for that and you can revisit the session at your discretion. If you have any questions as we go through the material, please just drop them in the Q&A, and I will be happy to bring those up either at the end of the session or as the topic arises. And we are thrilled to have an outstanding presenter today. So with that, I'll just make a couple introductions. Our presenter today is Beatriz Mauersberg. She is a financial wellness program manager at Money Management International. MMI is one of the nation's largest and most respected nonprofit financial counseling orgs with decades of experience helping people navigate debt, credit, budgeting, and a path to homeownership. And their housing counselors are HUD approved and work with clients across the country every day with all kinds of questions like we might explore today. Beatrice brings deep expertise in financial wellness education and has guided countless individuals through the early stages of home buying, from understanding what they can afford to working with lenders to what to expect at the closing table. Beatrice, we're so excited to have you. The floor is all yours.
Thank you, Ned, and welcome. Welcome everyone to today's presentation, Home Buyer Basic. How can you get ready for home ownership? Great topic, and thank you, Oro, for the invitation. So we are going to go and get into the program. Um, we invite you to ask questions, and we'll make sure we'll have plenty of time at the end to answer those. If I have the answer, I will. If not, we will be able to do a follow up. So thank you, Ned. Credit counseling services, Money Management International. Nate already explained a little bit about our programs and services. Budget and credit counseling is available for free 24/7. These are today's objective. We're going to be talking about the importance of assessing your current financial situation. Important to know the law when it comes to fair housing, exploring down payment assistance resources, getting the home buying team. Who are the people that will work with you? Who are the professionals that they are going to be working with you? We'll talk about the mortgage loan process, the different types of loans. When you are recruiting your professional, the real estate, what to expect from them. Homeowners insurance, another professional that you need to be, they need to be part of that team. We'll talk about what covers in that homeowners insurance, home inspection, and also I'll talk about appraisal because there are two different things and what to expect at closing. So lots of great information here. The first step is assessing your financial situation. And this is like everything you're ready to do. If you're going to start a business, if you're going to change jobs, if you're going to do any changes, it is important to assess our financial situation. How do we do that? Well, reviewing your budget. In your budget, you're going to make sure you understand what is the income, what are your expenses, what things needs to be, you need to do because that budget has to balance. We cannot be on red every month. So what are the things that we need to do? What adjustments we need to do? And also, you are in this assessing your financial situation is also part of checking your credit report. We're going to talk a little bit more about how are you able to do. So, in order to determine where you want to be, so in this case, you want to be a homeowner, it is necessary to determine your starting point. So, with that point, you can then create your budget, create changes or make changes to your spending plan, and also you're able just by knowing your financial situation, you are also able to make choices based on that budget. This is a copy of our budget form, but you are able to create your own one, Excel spreadsheet, or you may already have one. But this is important when you are reviewing, when you're creating, or if you already have one, create reviewing your budget. But how you create a budget if you don't have one? There are different ingredients that are part of that budget. The income is the first one. Keep in mind that the income is going to be your net income when you're creating the budget. Net is the money that we bring in home, is the money that goes directly into your checking account if you get paid directly by direct deposit. The three main ingredients are your expenses: fixed expenses, variable expenses, and periodic expenses. And here, the fixed expenses are the ones that they are the same amount every month. Variable expenses are the expenses that vary from month to month, and periodic expenses. And how are we going to calculate that? Well, we need to make sure that we have an an average amount assigned to each expense, because that is the amount that that we have to have available every month in our budget. Okay. And there is also an exercise that we invite everyone to do. A lot of times, participants will say, well, I'm not sure how much I'm expending in here or there. Well, do a daily record of expenditures. That is a great exercise. Do it for 31 days, 30 or 31 days, and you're able to track every single expense. So, and that way you have all the information that you need to put the right amount under each category. The next step, and this is part of knowing your financial situation, is that balance. The balance is so important. We must have our income must balance the expense. So in here is where you are going to answer some questions depending of the results. So if we get a positive number, you take income minus expenses, and you get a positive number, it is important to ask ourselves, have I included everything? Am I missing something? Am I building savings? Am I paying my my obligations complete? But if the result is a negative number, then we need to either increase income, decrease expenses, or combine a combination of both. So very important, and this is something that we tell our participants, our associates, to please make sure that you do this every month. Once a month, we need to make sure that our budget balance. Following with knowing our financial situation is obtaining our credit report. There is a law. There was a law that was enacted back in 2003, the Fair and Accurate Credit Transaction Act, FACT, that allows every consumer in the United States to obtain a free copy of your credit report for free. From each of the three credit reporting agencies. We have Equifax, we have Experian, and we have TransUnion. So there are three credit reporting agencies, and it's very important that all of us take the time to request our credit report, because we don't want to have any surprises when we are sitting in front of the lender or the bank. The law also, there was another law that was enacted back in 1970, and they did an amendment in 1996 where every consumer in the United States is eligible to dispute errors. So immediately when you check your three credit reports, you want to make sure that everything is correct, and the law allow us to correct any errors that we may have in our credit report. So very important, and this is part of getting ready for home buying. So how to obtain a copy of your credit report. It was done through the government, annualcreditreport.com. Make sure you go to the right site, annualcreditreport.com, and you are eligible to request your credit over the phone, or online, or by mail. With that, again, reviewing your three credit report histories, and what is it that you want to, what do you need to do to prepare for homeownership? So once you request your credit report, review it, make sure there's no errors, keep balances low, keep credit card balances low. You must pay your bills on time, because part of your scoring is 35% of your score is payment history. Again, I explain, review your credit report and dispute errors if it's necessary. When you are in the process and getting ready for that home ownership, do not charge more than what you have available in your budget. You don't want to maximize the balances on your credit card. You want to keep those balances low. And very important, if you have a budget, then you know that if you go out to eat and you charge, then you must pay that completely at the end of the month to avoid paying interest. Also, do not open lines of credit very often, especially when you are in that road to homeownership. That is, just keep what you have, use what you have, and continue to pay it on time. Keep balances low. Do not close any accounts either. Okay. So fair housing, it is very important to know the law. The Fair Housing Act was enacted in 1968. And what exactly is the Fair Housing Act? Well, it prohibits discrimination in housing because of race, color, national origin, religion, sex, familiar status, and disability. So it is very important that you may want to get familiar with this, especially in the home buying. There are several prohibited practices throughout the home buying process. So it's very important to get familiar with those. And sometimes some attendees will say, well, that's not happening. Well, yes, it is still happening. So you have to be familiar with that. There is a phone number in there. And then for more information, you can go and visit HUD.gov to learn more, or if you need to file a complaint. All right. Down payment assistance. Well, what is down payment assistance? Down payment assistance is a help, is money that we can get to put toward the closing costs or as a down payment for the purchase of the home. And this is something that not many people know much about it. So it is important to do the homework to know what down payment assistance programs are available in your city, in your county, in your state, or maybe federal. Okay. So go and do your research, especially in the area where you're buying, what down payment assistance programs out there. In general, down payment assistance can be a grant, which means is forgiven after certain years of staying in the home, and some are silent loans. Those silent loans will stay as a silent loan on your main mortgage, and they're 0% interest, and they have to be repaid when the homeowner sells the house or refinance the house or no longer live in that house. So very important to understand. Each down payment assistance program have their own different requirements. So it is important to do the homework and see which one is the best according to your own situation. Shopping for a loan. Well, there are several places where we can find home loans, credit unions, commercial banks, mortgage brokers. You can also find a lot in the internet. But when we are doing the research, it's very important also to understand what is the interest that they are going to be charging, finance charges, what are the total payments that we are going to end up paying. And the most important thing is ask questions and don't choose anything until you are 100% sure. Talk to a housing counselor, get advice from people who know. And this is very important to do your homework and ask questions so you can avoid predatory lending. What is predatory lending is when some lenders out there are charging outrageous um, amount of closing costs or fees or high interest. So very important to be, always very cautious on all of that, and ask all the questions that you can. Mortgage loan types. They are conventional, FHAs, VAs, and USDA. FHAs usually is Federal Housing Administration. They are backed up by the U.S. government, and that is usually the one that people buying a home for the first time ended up getting because it's the friendlier one. It requires lower down payment, 3.5% of the purchase price of the home of the home loan. And again, Federal Housing Administration guarantees the loan. Conventional loans are private loans, and usually that is the loan that we get the second time we're buying a home. We buy our first home, we get equity, we sell the house, and then we move on. And other programs, VA is for consumers and the military. That is a great, great program. So ask questions if you're in the military or a veteran. And then the USDA is a program for consumers who wants to buy outside the city in rural area. So those are the different mortgage loan types. When you're shopping for your mortgage, make sure that you are going to find the right lender. You're going to get pre-qualify. You are going to, you're going to meet with that lender and they're going to find the best product depending on your situation, your income, where you want to live. And then in the pre-qualification, they are going to ask you for paperwork. And once that paperwork, then the obtaining a pre-approval, and then the lender is going to tell you what information is requesting. For example, the W-2s, income, referrals, taxes, etc. And but the lender is able to walk you through all that information. A mortgage, who is the mortgage professional? This is one of your team members in the process. Is going to, his job or her job is to qualify you for the mortgage, is going to collect the required documentation, is going to be a liaison between all the members of your home buying team. And this is the person that is going to be telling you everything about your loan once the loan application is going. So here is very quickly is the process steps. Pre-qualification is that first meeting that we have with them. We bring all the paperwork. They tell us how much can we afford, and so forth. Then we are able to buy. We are able to find the property, and that is the job of the realtor. Once there is a property, then the pre-approval starts. So there is a conditional approval and then the final approval. And but this the pre-approval starts once there is a property. And then once everything is in order, then the loan is clear to close. Um, it is also part of the responsibility of a prospect homeowner is to really think about what are their personal needs. What kind of home? Am I living with an elderly person? Am I good, or I want a garden, or I don't like to do landscaping. It's only the two of us, or do I have children? So it's very important that you start thinking about that before you meet with your realtor. What are the community, the area, the city. I want to be closer to the school for the children. I want to be closer to my job. I don't want stairs. I want a one floor. So it is important to develop a list of the requirements, your wishes, when you are finding a home. Then you are going to start recruiting your real estate agent. So the real estate agent is the person, is the professional. And again, you want to interview several real estate. You can ask your friends, you can ask your coworkers, you can get referrals, and the realtor is going to have a meeting with you, and is going to ask you, what are your wishes. Also, very important, that realtor is going to ask you for the pre-qualification letter. And that is a letter or a form that the mortgage lender, that first meeting, he is just doing an overall information about your financial situation. So when you start talking to the realtor is going to ask you, um, for that pre-qualification, to have a very good understanding of how much are you pre-qualified. And then again, it's going to ask you what part of the city, what neighborhood, what county, what area. And then the realtor is going to ask, it's not a contract, but it's an agreement that I'm going to, as a prospect home buyer, I'm going to work with you and you are going to work with me. So a lot of times some participants will say, no, I don't need a realtor. A realtor is an important member of your team. It is it is important. And so yes, you need to have a realtor. Then at the same time, you are going to, when you are looking for the homes, and in the very beginning, when you think about buying a home, you can start talking with your insurance agent. You may have an insurance agent where you have rentals insurance, you have a car insurance. Then you can start talking to that agent. Hey, I'm thinking about buying a home in this specific area, and that insurance agent can give you an idea of how much the insurance is going to cost, and so forth. Uh, the homeowner's insurance is required. It's required by the banks who is giving you the loan for the house. Um, if for some reason we let that expired, then there are some forced policies where the mortgage company is going to have a homeowner's insurance in your loan. And those can be very, very costly. Homeowners insurance must be paid, excuse me, must be paid 1 year in advance. And that's one of the part of the closing costs that we are going to bring to the table on the date of closing. 1 year in advance of the homeowners insurance. The homeowners insurance is going to protect you, your belongings, your property against damage. Okay. And homeowners insurance, very important to talk with your agent to see what covers, what doesn't cover, and understanding more. But it has to be paid 1 year in advance. After that, is going to be included in what is called an escrow account. So you're going to be paying 1/12 of your year with your monthly payment to the bank. Depending on the bank may have an escrow account, which is like a saving account where they're going to be depositing 1/12 of your homeowner's insurance, and 1/12 of your property taxes. And then when those are due on the anniversary of your purchase of the house, then the bank directly will pay that. But again, each lender is different, so that's something that you must, keep in mind, and see if that's what it's going to be doing. Now, home inspections versus appraisal. Home inspection is a company, an inspector is someone that you hire to inspect the property. So once you find the property with your realtor, uh, then one of the contracts for the seller is to ask for dates to do a home inspection. There are several national organizations, so you can Google that information. Association of Home Inspectors, and you can hire an inspector that works in your area. That inspector is going to inspect the property. It takes around 4 hours to inspect a property. The AC unit, the heating unit, the electricity, is also going to inspect the flow of the water, the roof, if they are infestation for maybe bugs or anything. And when you are hiring an inspector, please ask for samples of report, how long it will take, if you can go at the end of the home inspection, and you are responsible to pay that home inspector. Okay, so very important. HUD, the U.S. Department of Housing and Urban Development, does not require home inspection. However, it says for your protection, get an inspection. Now, let's talk about appraisal. All right. So, home inspector works for you. So, let's talk a little bit about home appraisal. Um, the appraisal, the appraiser works for the bank. Okay. The appraiser works for the bank. So, the bank hire an appraiser from a company, and they're going to inspect the property, and they are going to be able to determine the fair market value of the home, because the seller is selling the property at certain amount. So the lender, the bank, wants to make sure that that property is worth that money. Okay. So the appraiser do, and the appraiser may come back. This property is appraised for more than it was is being sold, so that's good. But if the property is appraised for less, then there will be again a negotiation. Back on the negotiation, your realtor is your best friend and is the best negotiator to work with the seller and the realtor who is working with the seller. The appraisal, the appraiser that works for the bank will send, and there will be a fee for that. There will be a fee for that. And we all ended up paying that at closing. Again, mortgage home inspectors, most mortgage lenders do not require a home inspection. I mentioned a little bit ago that HUD does not require, but it is highly recommended by those. But for it's recommended by those on all sides of the home buying process. It is recommended by the lender, it's recommended by the the homeowners for the insurance agent. It's recommended by your realtor. So home inspectors are important. This is an important process because they're making sure the home that you're buying is in good condition and that it will stay that way and stay that way. Um, Here again, it is money that you're gonna be paying up front. So why to invest in a home inspection is not only to inspect the property, but the home inspector is also able to tell you uh, what maintenance needs to be an ongoing maintenance for you, knowing if major repairs, needs to be done before the closing. Also is able to show you where the shut off water is, where the control for the electricity, major things for the property that you are buying. All right. So this is before the closing. And so just to review, we met with the lender. The lender gave us a pre-qualification. Then we work with the realtor. The realtor show us house. Then we put a contract on a house that we like. Immediately when there is a contract on that property, then we communicate that to the lender, and then the lender starts the whole home loan process with more detail. They are going to work with several members of the lender, and they are some uh, professionals that they will look with very magnified glass, just to make sure that everything is correct. Your taxes, your credit report gets pulled. All of three credit reports gets pulled. Your income, referrals, taxes, etc. And then that process continue. Meanwhile, you are able to inspect the property, and you already start talking to your insurance agent to purchase homeownership insurance. Before closing, is also recommended that do a final inspection of the property, especially if there were repairs to be done, by the seller. So you want to make sure that everything is okay, that everything is correct. Now, there is a new law that well, yes, I want to say it is a new after the housing crisis that happened a few years ago. Now HUD, the US Department of Housing and Urban Development, requires requires that the lender sends you the closing document, the closing disclosure, 3 days before closing. 3 days before closing. So there it is. It is important to review that closing disclosure. If you have questions, then here is where you can ask your loan officer, you can ask your realtor, but it's very important to receive that closing disclosure 3 days before closing. Before closing. So then you arrive to the closing day. The lender tells you we're closing on the property. Everything is okay. You're being approved by the loan. And there will be several people in the closing in the closing table. One of those will be the attorney. Usually the attorney represents the lender. However, we are in the United States of America. We have 50 states, and each state may have different rules and regulation. So this is something important that you can ask the lender, do I need to bring my own attorney, or is that something that the lender? Because in some states, we have to. We have to bring the attorney that represent us to make sure that everything is okay. But in general, the attorney represents a lender interest. Make sure that there's no outstanding legal barriers with the property. Executes the contracts. The bank is going to give you this money, and then we, as a home buyer, we're going to we're going to sign a lot of paperwork. We're going to sign agreements, and then all that paperwork gets submitted, so it gets recorded in the courthouse. So other people in the closing, your realtor, the seller, the seller's realtor, the lender, and the attorney. So that is on the closing day. Again, we this is a very condensed information. It is so encouraged for everyone to attend a HUD approved home buyer workshop. And so in that home buyer workshop, you're going to get a lot of information. You're going to get resources, knowledge. You're going to learn a little bit more in detail from each professional that is involved in that process. And one of the most important thing is learning all those home buying terms. And that way someone says escrow or down payment, and then you know what that is. So it just very quickly preparing to shop, the financing, finding the right lender, finding the property, making the offer, negotiation, closing the sale, uh, getting my loan, and closing on my home, and moving in. So home ownership is very, very good. Okay. Besides you and your family, there are a lot other uh, parties in that process of home ownership. Remember, I already mentioned several, went over all these professionals that they're part of your home buying process. But home ownership is a good thing. Home ownership is a good thing. It gives family stability. Um, it give equity. So you're paying a monthly payment. That will be your monthly payment. It will include the principal, paying back the principal that the lender is giving you, plus interest. And then in that mortgage payment, I mentioned that will be included also 1/12 of your year property taxes and 1/12 of your homeowner's insurance. And depending on the loan that you got, usually FHA, remember FHA, if you recall that, FHA says that we only need to put down 3.5% as a down payment. So some loans require for us to get an insurance, but that insurance is protecting the lender. So we need to pay for that. And there are several insurance, but the private mortgage insurance protects the lender. The homeowner's insurance protects us, our, our home, our family. All right. I mentioned earlier very quickly about down payment. So part of that down payment on FHA loan, which is 3.5%, usually there are money available through down payments that you're able to cover your down payment. A lot of the programs, the down payment requires that the home buyer, the person who is buying, puts some money from their own. Okay, not a lot, but some money, and then they're able to give you the down payment, and that down payment we're able to use for the closing, when we come to the closing table as a down payment. If the amount received is more than what the down payment requires, all the not the down payment, I'm sorry, the closing costs require, then that money left is going to be paid to the lender to reduce the loan amount. Okay, so very important to do our homework because there's a lot of resources out there. All right, so this is a summary of everything that I have covered here. Assessing your current financial situation, this is the most important step to see what things we need to change. Requesting your credit report. Do I have some debt that I need to pay? Do I need to work on increasing my credit score? What do I need to do before we're sitting in front of the loan officer? Knowing the law, because you're going to start working with several professionals, so you want to make sure that everybody understand the Fair Housing Act. Exploring down payment assistance resources in the area that you're thinking to buy. Getting all those professionals ready, all those people who are going to be part of your home buying team. The mortgage loan process, interviewing. Just don't go just to one. Interview several lenders, interview several real estate agents, and then get referrals from your friends, from your coworkers, from family. Homeowners insurance. Usually, we advise that you can start talking to the agent that you've been using if you have a car, if you like it, or again, you can get referrals. You can get referrals. Home inspection, home inspector. There are several organizations in the United States. You can Google those home inspectors association. You can ask also for referrals. Appraisal, you don't have to hire an appraiser. That is the job of the lender. And in general, what to expect at closing and who is going to be in the closing table. All right. So again, we encourage everyone to ask questions. We'll do that. Today's presentation is designed for educational purposes only and should not be construed as an investment, tax, or legal advice. Here is our information, our website. We also have a online financial learning program, free of charge. All you do, go to learn.mmiuniversity.org. You can create your own account, username, password, and there are lots of resources in there to give you a lot of knowledge on financial literacy. All right. So, Nate.
Beatrice, thank you so much. That was super valuable. As we kind of discussed before the call, I am not a homeowner myself, and so I was super excited for your presentation. I learned a lot. I know it was also a lot of information to get through, so we appreciate, you condensing that and making that easy to understand. For everyone that stuck with us, thanks so much for joining. Really quickly, before we get to the Q&A, we have a quick poll just to collect some feedback. It's super valuable for us for future programming. So I will launch that now, and we'll say that for everyone that completes it, we do give away a $50 Home Depot gift card that we'll raffle after the session. So please complete that for us, and then we will proceed with the Q&A. So I will put that up now. We'll just give it another 30 seconds for anyone left that still wants to complete the poll. We really appreciate the feedback, and then we can go to the Q&A. All right, thank you everyone. I'm going to end the poll now. Really appreciate it. Like I said, we will reach out to someone randomly after the presentation to provide information on how to collect your gift card. Now for the Q&A, we have a few questions we collected before the session as well as during. If you have any additional questions, please put them in the Q&A chat. First, let's see. Beatrice, for someone who has never bought a home before, what does the process actually look like? And where do most people get surprised? Emphasizing on the surprise.
On the surprise. Okay, that is an excellent question. I think one of the surprises that I have heard in some of my classes is that they have never checked their credit report, or maybe they only check one. And when the lender pulls their credit report, they notice that they have accounts that either don't belong to them or they've been reported as late. And so it kind of give them a barrier, because if they are not theirs, they may be a victim of identity theft or maybe an error or something. So they need to kind of talk about it. So it needs to. So that is one of the surprises that I have heard the most. The other one, also that sometimes participants tells me, is that there is an order, and I went kind of, I explained the order. They go first to the realtor, and the realtor, the realtor's very good, and the realtor knows the calculation. If I say, hey, I earned this is my gross, this is my net, because remember, the lender is going to take in consideration your gross, not your net. And the realtor say, oh yeah, you can qualify for this amount. And then we start looking for homes, and then I go to the lender, but the lender does not qualify me for the amount. Oh, I thought that I'm qualified for this amount because I was told. No, the lender is the person, is the professional that we need to visit before the realtor, because they know the numbers, they know everything. They're the one who is going to give us the loan.
Perfect, perfect. Thank you so much for that. Let's see. Next, we've got, let's see, there's a few here. I'll try and get through them all. What is the difference between being pre-qualified and pre-approved, and why does it matter when you go to make an offer?
Yes, okay. The pre-qualification is when we go the first time to the lender, and the lender is going to request us several paperwork, bank statements, if we have a retirement account, our income, our pay stubs, taxes, and all of that. So the information is received, and the professional, the lender, is going to just do an overview. It's going to do an overview depending on of all of this information. They're going to be able to pull our credit report there. They're going to be able to see all of the three credit reports, and we have three different scores. They said, okay, based on all of this information, because the lender is looking at it in front of it, then you are pre-qualified for 300,000. So he is going to give me a letter saying this person is pre-qualified for 300, and that is the letter that we'll take to when we are looking for houses. Okay, but so the seller knows that this person already went, is looking, is talking, is working with the lender. Once there is a contract with the seller, once there is a contract with that property, then that information is sent to the lender. So there is already a property. There is also something that we are buying. And then the lender sends all that paperwork, and depending on how long has passed, they may pull my credit report again. They may get updated pay stubs, updated bank statements. And the loan officer at that moment, when there is a property, send that information to their team. There is called an underwriting team. And those people will take a magnifying glass, and they're going to look at everything in very, very, very detail. And at the end of that, if there's no problem, then our loan gets approved. So the underwriting with their team is going to go with a magnifying glass, they're going to ask, they're going to review, they are going to, it's just like lifting a carpet and taking everything out. I mean, out. And there may be questions, for example, um, and I have heard some of my lenders that come to my home buyer classes, and I say one of the example may be, well, we noticed that um, you made your income is this amount, so you get paid every other week, so it's the same amount. But suddenly there is a deposit of $2,000 or $3,000. And so can you explain what is that deposit? And then you say, oh, wait a minute, I sold my car. So, okay, show me. Okay. Because the lender wants to make sure that everything is clear and then they're following the law. Okay. So that's the difference between pre-qualification and pre-approval.
Gotcha. Okay, that makes sense. Let's see. I think we
Mhm.
have time for one more. Beyond down payments, what other upfront and ongoing costs should people be budgeting for to make sure they're not caught off guard?
So the question is more like for closing costs, like what money I need to
Yes.
bring. Yes. So yeah. So if I'm getting down payment, perfect. But people, prospect home buyers should have a savings where they can have enough money for the uh, when we are looking at properties, when we're looking at properties and we see the property that we not buy, there is to make an offer and to get that contract going, the home buyer have to put money down. It's called earnest money, and it's like I am serious. This is the house that I want to buy. So the seller takes that property out of the market. So people need to think about the earnest money, also, the appraisal, because that's something that it needs to be paid. Um, the home inspector, that is something that needs to be paid up front. And innate, like very important advice is people should have liquid savings account. They need to have not only to cover those expenses, but we need to have money and savings that will allow us to be ready when we move, like moving costs, setting up the utilities when we're ready to move in, extra amount of money. And we like to call it liquid savings because that's money that we're able to withdraw with no penalty, with no penalty.
Gotcha.
So,
And that's
yes.
perfect because that's exactly what I think this individual is wondering is like, what are those other things that kind of come later? like you said, moving, setting up utilities, everything like
Yes.
that.
Yes.
Well, I think that's all the questions we have time for. So, just in closing, for everyone that stuck to the very end, we really appreciate you being here. We hope this session kind of gave you a clear, more confident picture of what your home buying journey looks like. Thank you so much, Beatrice, for joining. We really appreciate you sharing your expertise and MMI's, expertise and resources with us today. For everyone that's here, if you have any more questions or any other, need for resources, please reach out to Oro Concierge at concierge@oroimpact.com, and our team will help you one-on-one at no cost. We'll be sharing this recording shortly, and so you can revisit it as well as any other resources from today's session. For next month's series, we will be doing building your down payment funds. So for those that are interested in learning some other, financial tools to save to make that initial large down payment, please join us. It will be on July the 30th. Otherwise, again, Beatrice, thanks so much, and we'll see you next time.
My pleasure. Thank you. Thank you, Nate. And thank you, everyone who attended today, and good luck.